Hello traders, you are welcome back to the channel. If you are looking to refine your trading strategy and make your charts easier to read, you are in the right place. Okay, in this video, we are going to dive deep into the median Renko bars. It's a powerful tool that can help you eliminate market noise and pinpoint trends with greater accuracy. If you are ready to take your trading to the next level, make sure to like and subscribe for more valuable Forex insights. Now, let us jump into how median Renko bars work and how you can use them to your advantage. Before we get into the details of how to use median Renko bars, let us first understand what they are and why they are different from the standard Renko bars you may already know. Okay? Now, traditional Renko bars are created based on price movement alone. All right? Ignoring time. These bars form when price moves a certain amount from the previous bar, which helps to filter out minor price fluctuations and gives you a cleaner view of market trends. But median Renko bars take this a step further. Instead of just using the closing price of the previous bar to determine where the next one starts, median Renko bars are calculated based on the median price between the open and close of the previous bar. All right, this approach smooths out the price action even more, reducing noise and making trends even clearer. So what does this mean for you as a trader? Well, by using median Renko bars, you will get a better visual representation of the underlying market trend without being distracted by the smaller price movements that don't matter much for trend following strategies. So it's a great way to improve your charting and make better, more informed decisions. All right. Now that we understand what median Renko bars are, let us just talk about how to read them on your chart. Now, each median Renko bar represents price movement that exceeds a set value, typically referred to as the brick size. Okay, when the price moves beyond the brick size in either direction, a new bar is formed. So if the price moves higher than the previous bar's median, a green bar is formed. Okay, so these green bars are usually when they usually formed when price moves beyond, higher than the previous bar's median. But if the price moves lower than the median, that's when you get the purple bars, or basically depending on your color code, right? Perhaps red bars if you want to make it red. So the great thing about these bars is their simplicity. Because of how they are calculated, you are going to see fewer bars on your chart compared to traditional candlesticks. So what makes it easier? This makes it easier to identify trends. Now, in an uptrend, you will see a series of consecutive green bars. All right, a series of consecutive green bars in an uptrend. Okay, and in a downtrend, you see a series of consecutive purple bars, or rather bearish bars, depending on your color code. Okay, so this filtering of smaller price fluctuations allows you to focus on the bigger price movements, making it easier to identify key levels of support, resistance, and trend changes. Now, let us talk about why median Renko bars should be part of your trading toolkit. One of the biggest benefits of these bars is that these bars help you filter out market noise. In Forex trading, the market can often be volatile with random price swings that don't reflect the overall trend. So with the median Renko bars, you are able to remove those short-term fluctuations that don't matter for long-term trend analysis. Another big advantage is that median Renko bars make trends more visible. Unlike traditional candlesticks, which can sometimes be choppy and hard to interpret, median Renko bars give you a much clearer picture of the prevailing trend. You will notice that trends become more obvious as the bars align in one direction. When the bars are consistently green, you know that the market is in an uptrend. Very super easy. And when they are consistently purple, you know that the market is in a downtrend. But there is more. Median Renko bars are also great for filtering out false signals. Okay, with traditional candlesticks or even standard Renko bars, you can sometimes get fake outs. Those sudden price movements that reverse right away. Yeah, because of the way median Renko bars are calculated, they are more reliable at identifying genuine trends, reducing the likelihood of falling into traps set by small, insignificant price fluctuations. Now that we understand the benefits of median Renko bars, let us talk about how you can use them in your trading strategy. The first and most obvious way is to use median Renko bars to confirm the trend direction. If you are a trend follower, this tool is perfect for you. You just look for a series of consecutive green bars for an uptrend or consecutive purple bars for a downtrend. Once the bars align in one direction, you've got a clear signal that the trend is strong and it's time to consider entering a trade in that direction. Another strategy is to use the median Renko bars in combination with other technical indicators like moving averages or the MACD. For example, if you see a series of green bars and maybe the price is above a moving average, that is a strong confirmation that the market is in an uptrend. Similarly, if the MACD is also showing bullish momentum, you've got multiple indicators aligning in your favor. You can also use median Renko bars to spot reversals. If you are seeing a series of purple bars, but suddenly a green bar just appears, it might indicate the start of a reversal or a temporary pullback. So this could be a good time to look for an entry point for a potential trend change. Now, here are a few tips to get the most out of median Renko bars in your trading. Adjust your brick size. Okay, the brick size you choose will have a big impact on how many bars you see and how sensitive the tool is to price movements. A larger brick size will filter out more noise, but you might miss some trades. A smaller brick size will give you more details, but could show more noise. Experiment to find the best settings for your trading style, okay? And then combine with other indicators. As I mentioned earlier, combining median Renko bars with other indicators like moving averages, the MACD or RSI can give you even more confidence in your trades. And then finally, use them on higher time frames, okay? The higher the time frame, the more reliable median Renko bars become for identifying longer term trends. For example, using them on the 4-hour or daily charts can help you identify strong trends and avoid being misled by short-term fluctuations. So that is a wrap on median Renko bars and how you can use them to make smarter, more accurate trading decisions. By filtering out market noise and giving you a clearer view of trends, they are a fantastic tool for any trader looking to improve their technical analysis. If you found this video helpful, don't forget to hit that like button and subscribe to the channel for more valuable Forex trading strategies. Let me know in the comments if you've used median Renko bars before or if you plan on trying them out, okay? Thank you for watching and I hope to see you in the next video. Happy trading.